Hello everyone, and welcome back to Explain the Charts. Today is March 10th, 2025, and we're going to be taking a look at EURUSD. We'll be discussing the latest news and headlines impacting this major currency pair, and then we'll jump into the charts to see how these events are reflected in the price action. First, let's discuss some recent headlines. Recent news suggests the EURUSD pair faced selling pressure due to a bounce in the US dollar, reaching around 1.0800 at the start of this week. Also, the ECB trimmed its key rates by 25 basis points, signaling potential further easing because of trade tensions with the US and increasing military spending. Investors are also assessing Germany's €500 billion infrastructure fund, which is expected to boost the Eurozone economy. Now, let's switch over to the daily chart to see what the technicals are telling us. Looking at the daily chart, we can see that EURUSD has experienced a lot of volatility over the past year, trending downwards overall. We see a recent series of candles forming what appears to be a short-term bullish trend. However, we need to be cautious about this recent upwards movement. Given the fundamental outlook favoring a stronger dollar due to the Fed's controlled inflation and strong fundamentals, this bullish trend might be short-lived. Let's narrow the daily chart to look at a shorter time span. Here we can see a resistance level forming around 1.086. If the price fails to break above this level, we could see a reversal and a continuation of the longer-term downtrend. On the other hand, a clear break above 1.086, supported by strong volume, could signal a potential shift in momentum. Now, let's take a closer look at the 1-hour chart for a more granular view of recent price action. On the 1-hour chart, we can observe the more recent consolidation around the 1.08 level. The increased defense spending is weakening Europe's credit outlook and potentially denting economic growth in the long term, making the euro less appealing. Given all these factors, I'd say the likelihood of EURUSD reaching parity in the long term is higher than many might expect, maybe around 60 to 70% likely. However, it's crucial to monitor upcoming economic data releases and any shifts in central bank policies. Specifically, keep an eye on inflation figures and any announcements regarding trade policies. To recap, key price levels to watch include the resistance at 1.086 on the daily chart. A break above that, combined with positive Eurozone economic news, could invalidate the parity scenario in the short term. However, given the overall economic climate, any rallies are likely to be capped and will likely continue trending downwards.